Get ready, Tesla investors, or really just investors in general in this market. You, in about an hour and a half, are going to have the next Fed meeting. Now, there are some interesting things happening this Fed meeting. You're expecting a hawkish pause, and volatility is at the lowest levels that you have seen since before the COVID drop. This means that markets really are not expecting a downside move here. The markets are extremely greedy, according to CNN's Fear and Greed Monitor. And certain stocks have been on an absolute rip in 2023. Well, we have a breakdown of what we can expect from Fed Jerome Powell, things that could be really bullish or things that could be really bearish for our markets. And we also have a bit of news on Tesla as well. So we got a lot of things to get into. Hit the like button and subscribe to the channel and source your comments, questions, or concerns down below in the comment section. If one, you already know it, you want to grow your net worth, if you want to make more money, if you want to reach financial freedom, or stay up to date with everything happening in our markets on a day-by-day basis. So let's go ahead and get into this whole Fed situation. Now, first thing that I want to say is if you are an investor in Tesla, today is a huge day, and really for Tesla's business going ahead, because on one hand, Tesla is sensitive to the economy, right? If the economy is doing good or bad, it's going to help or hurt people's availability to buy Teslas. And then also interest rates. This meeting from the Fed has implications for both of those and where we go from here. Now, I want to start off this video with the PPI data that we got this morning. Now, PPI came in at negative 0.3% on a month-over-month basis. You're seeing deflation on a producer side of producing things. So that's a good sign for PCE, which is more directly related to PPI, and PCE is what the Fed likes to watch. So it's all but certain we're going to get the Fed that actually holds. People are expecting the Fed to give you a hawkish pause. Now, what a hawkish pause is essentially the Fed pausing, but speaking very negatively about potentially raising rates again, about holding rates higher for longer, things the markets don't like to hear about. Now, I'll tell you that the markets right now are almost as expensive as we were in 2021. On a PE basis, markets are trading at 20 times this year's earnings. In 2021, you were trading at about 21 times that year's earnings. So markets are very expensive here. And I think that makes this meeting a little bit more interesting, because even if you look at the volatility measures, ever since the debt ceiling was passed, you really haven't seen a lot of people going for those downside hedges. So if we get something that kind of spooks the markets, you could see downside hedges placed on this market, and that could negatively affect this market. Right now, we're expecting a less than 1% move the day after the Fed, in which you have not priced in a less than 1% move the day after the Fed in years. It's been years, believe that or not. So I think that does open up the potential for a lot of volatility. Now, specifically with the Fed, at 2 p.m. today, Eastern Time, you're going to get the interest rate decision and the summary of economic projections coming in at 2 p.m. Now, these things will give the markets a reaction. With the actual report that comes out from the Fed, it's basically like a copy and pasted report from every meeting. They kind of copy it to the next meeting, but they change language, right? So what we were getting in the majority of 2022 was that phrase, ongoing rate hikes. They changed that last meeting to further firming of monetary policy. Now we want to see something along the lines of pausing with accommodation to go higher in the future if we need to. Something along those lines is kind of what the markets are expecting. And I think that's really what we're going to get. I don't think there's going to be a big shocker in the Fed statement itself, but the summary of economic projections. Now, what's happened recently, and a reason why specific companies like Tesla have been moving higher is because the economy is doing relatively well. It doesn't look like we're going into a recession anytime soon, at least what the labor market would tell you, being it hasn't been this strong since the 1960s. And interest rate cuts are getting priced out of this market. Now, 2-3 months ago, you were expecting as many as 3 to 4 rate cuts in 2023. That was because the markets were expecting some form of slowdown or black swan event or something bad happening in 2023. Well, that has not happened so far. So the markets are now pricing those rate cuts out of the markets, meaning markets are now expecting a greater chance of a soft landing, a better economy. And that's positive for Tesla's business model. And now the markets are pricing in 1 rate cut in December and a couple more rate cuts in 2024, but it's off of inflation falling, not the economy going down the toilets, right? Not the economy getting terrible. You're just expecting rate cuts because inflation's coming down, the definition of a soft landing. So with the summary of economic projections, you're going to get a projection of where the Fed sees interest rates 1 year from now, 2 years from now, where they expect the terminal rate to go, and the longer term interest rate. Now, 1 year projections, the last summary of economic projections that we got was 4.3%. 2 year interest rate projections was at 3.1%. The terminal rate was 5.1%, in which you're at that right now. So we really don't expect that to move up too much. If it moves up to 5.25%, 5.5%, I don't think that's going to be a huge shocker for the markets. And then you have your longer term interest rate projections at 2.5%. Now, the key here is your 1 and 2 year projections, because if the Fed is looking at the economy like, hey, it's doing fine, we're not going to have to cut rates for even longer now. That's good on one hand, because a good economy is usually good for stocks, right? But the markets might start to say, hey, stocks have rallied this far because we are expecting rate cuts sooner rather than later in December. As soon as 2 days ago, we were expecting a rate cut in November. That could be a negative thing. If rate cuts start to get priced down the line into the future more. At the same time, if the Fed sees that the longer term interest rate will have to be higher than 2.5%, that's also not going to be a huge positive thing. Now, at the same time, we haven't got a descent since the start of raising rates, meaning that each member actually votes on what they want to do, to raise, to hold, to cut. They all vote. And every single meeting, they've all voted the same, which so far has been raising rates. Now, this meeting, you might get some people that think that we should raise instead of hold. And you want to see who dissents, why they dissent, and how many people actually dissent. And that would just be something new that we haven't seen before. So could add a little bit more volatility. Now, this interest rate decision and the summary of economic projections coming in at 2 p.m. is not going to be your final move. 2:30 p.m., you're going to get the conference, the Fed conference. That's where Fed Jerome Powell gets up on his podium. He reads you the statement, in which comes out at 2 p.m. That's not new information. But the questions he takes really can be important for the markets. And I think specifically that's his chance to bat down this market rally that we have seen so far. If the Fed does not want stocks where they are, he's going to take that chance to explain that at 2:30 on the actual press conference. I think that could be a potential catalyst for this market, considering you're not really expecting a lot of volatility. Usually, markets crash when nobody is expecting them to. Vice versa. Markets rally when nobody is expecting them to. And that's why 2022 and 2023 have been so bad for so many investors. Now, as far as Tesla is concerned, I do want to point out the obvious bear case against this rally, which, as you can see from this article, is the RSI. Now, this article says Tesla's $240 billion rally set to collide with a bearish signal. it's the RSI that they're talking about here. Now, the RSI for Tesla, yeah, sure, it is oversold. My counter argument to that is, hey, Tesla probably should have never been in the $100 range anyways. So this rally that you have seen, and the reason it's been so aggressive, is simply a lot of catching up from the depressed levels that we were at, that it really should have never been at in the first place. Tesla's PEG ratio is still lower than most of your big tech names, meaning that Tesla's actually cheaper when you factor in the PE ratio divided by the growth rate. A lot cheaper compared to an Apple or Microsoft. So really, is it that overbought? Yeah, sure, on the RSI, technically speaking, it is. But I don't think the RSI in this case holds as much weight as it typically would in another name because of that very specific reason. You're still down a lot from your all-time high, whereas a lot of your big tech names that are more expensive than Tesla on a PEG ratio are at or above their all-time highs. Think Apple, think Nvidia, think Microsoft. I would much rather own a Tesla when they have a lot more room to grow here rather than some of those other names. So that's the first kind of bearish argument that I want to put into a little bit more context here, that sure, maybe this does mean you trade sideways, you trade up or down, you get volatile, you let the RSI come down a little bit. That is for sure a possibility. And that's kind of what I would expect, is volatility, stock to move up or down, and to see that RSI come down. If the RSI can come down, like something like a Nvidia has done recently, where the RSI was severely overbought, now it's not as overbought anymore. But the stock just hit a new all-time high today, right? The RSI was more overbought over here, and then Nvidia kind of came down a little bit, and now it's back to all-time highs, and the RSI is way lower than it was previously. So if Tesla did something like Nvidia has recently done, that would be encouraging to me. And that's more or less what I expect to see from Tesla. Now, as far as the fear and greed index, this is a much more negative thing, I would say, for this market or for Tesla. Just all these factors that they track are in extreme greed territory. And even if you don't see a full-on collapse in the market, that typically means that you need to see some reset, some downside in the markets to get this back into a more sustainable level. So eventually that will happen. If it'll happen today or tomorrow or next week or next month, that's where it gets hard to actually forecast. But Tesla doesn't seem to care whatsoever. There has been so much good news recently. This rally has been justified. At the same time, you've seen massive bullish option inflows, and you see a very large short position that has completely been blowing short positions up. If you took on a short position in Tesla, you are down substantially on your position. And Tesla has even broken above key levels, in which we'll talk about briefly here in this video as well. Now, some of the news today is basically France is begging Tesla to build a factory in France. And I think they will eventually do that. And I think it will be highly subsidized. So I think this will be a positive for Tesla, because after all, if they really want this factory here, Tesla's going to be able to cut a sweet deal to get the factory in France. Now, this article says France wants Elon Musk to build Tesla factory in the country, even as it threatens Twitter with a ban. Now, it says, quote, we have also invested in an entire sector of electric batteries, so we will try to convince him that France is the best possible place in Europe to establish the next Tesla factory. And Barrett said this, and he is the digital minister for France. So we don't have too many details on this, but they're basically begging Elon to build another factory in France, again, which I think is going to come with quite a few perks for Tesla if they choose to go down that road. Now, if you look at Tesla on a more technical basis, again, the RSI, yeah, sure, it could come down a little bit. Doesn't mean the stock has to absolutely collapse, or Tesla could rip to over 300 based off of what the Fed says today. that is certainly possible. Literally, by the end of this week, by next week, you could be over $300 per share. Let me know what you guys think about that down below in the comment section. But Tesla broke above 250. I think the psychological significance of 250, you would have gotten a lot more resistance there if this rally was not going to continue. Indeed, Tesla has just continued higher, hitting a high of $261.56, currently trading at $258. If you were going to get some downside, I think you wouldn't have rallied so far above $250 per share. This leads me to believe that you are going higher. And after all, you are above your longer term resistance line, which is this line right here, which Tesla broke that around $225 per share. So it looks like Tesla could be in for some more upside right after we get done with this catalyst today, which is going to be the Fed. Now, subscribe to the channel if you guys want to stay up to date with everything happening with Tesla as well as the broad markets. We are going to be extensively getting into the Fed meeting right after it's put out. So we're going to get you that information as soon as possible. It's going to have some big implications for our markets as well as for Tesla stock. Ladies and gentlemen, thank you very much for watching. Hopefully you learned something out of this video. If you did, hit the like button on your way out. But comment down below, is there something I missed? Is there something that you want to add to this? Let me know down below in the comment section. You guys have a great rest of your day, and I will see you very shortly.